Morning, everybody. Hope you're having a great Saturday so far. We're going to get right into it. Weekly preview here. We're going to be talking about the economic calendar. We're going to be talking about the overall markets, what I'm seeing. So let's get into it. So economic calendar this week. If we look at this past week, I mean, everything was pretty bullish. Jolts, job openings beat. CPI, core inflation beat. PPI beat. And then Michigan consumer sentiment, big miss there, but we already know the sentiment is really weak right now. We already know that the consumer sentiment is really weak right now. So it's showing us on the fear and greed index. It's showing us on the Michigan consumer sentiment index. It's showing us on a lot of different things. Just overall, people being very bearish right now. So let's jump ahead to this week. We have retail sales month over month expected 70 basis points from negative 90 basis points. Building permits, housing starts, that'll be key. It's expected to grow. Housing starts are expected to grow, but then building permits are not. They're supposed to fall a little bit. So that's not that great, honestly. And then we have the Fed rate decision. We're at 4.5% right now in the Fed interest rates. So that's going to be a huge day on Wednesday. You guys already know it's going to be a huge day. I definitely don't think they cut. I think they hold, but I do think, we could get a very dovish Fed signaling for more cuts. I feel like if we don't get a dovish Fed signaling for more cuts than just one or two this year, then I think people are going to start freaking out a little bit again, and we could see a flush. Thursday, existing home sales, they're expected to decline. Existing home sales have been meh, for a little while now because interest rates are so high. So got through that. Let's look at the monthly chart. Monthly chart, I already had a big long write-up about this, so I'll be brief and quick with it. If things hold here, if things hold and we flip to red on the high five, then we could be in it for a crash. I put it like 20, I put it like 30% that we could be entering a crash, just because of like the whole layout. Williams consolidation box is broken out. You see what happened last time. We went into the 2022 crash. We're breaking out here, but we still have 2 weeks left in March. And we've seen it before, with this candle right here, like big drawdown and then big wick up, right? Like that could definitely happen here. And if we big wick up these last 2 weeks and get back up to like 505, I'll find it hard not to believe that this just goes right back into, where we were in February. Like if we close right here, if we close right here at the bottom of this, we wick back up here and we close here, then that puts the Williams percentage range right back to where it was when March started at the end of February. So that could happen. There's a lot of people bearish. There's a lot of people in puts. There's a lot of people shorting the markets. And yeah, it definitely could happen. I think there's a little bit more downside to the 459 profit target like we talked about. But yeah, I mean, you hear it with me talking. You just don't know. Like right now, super bearish and looks like we're about to enter into a crash down to 400. But we haven't made that bearish cross yet, like we did back in 2022 on the MACD. We have on the RSI, but again, that can get sucked back up into an over, or it can make a quick down and up cross, right? It's once you get all three of these crossing, right? That's when it's super bearish. So, we crossed here, but it's really not super bearish until we get down here, right into like this sweet spot right here from 30 to 80. So yeah, these can change as well if we do get a big rally this last 2 weeks of the month. We just have to see. And one other thing why we could possibly get that big rally, again, we're just gonna play it how it shows it, and at the end of March we're still down here or something like that, and we're like engulfed, then I'm really gonna, I might go 50-50 on the crash to correction ratio. But the one big thing I'm seeing is, look at all this volume we had during the 2022 crash. Big selling volume. Look at this volume. Very weak. Very weak. And it's like, honestly, the buying and selling has been weak since September, right? Where before we were bull running from 2023 on, and we had really good volume. So even look at this, like August 2023, like that big pullback or this correction that we had here, big selling volume in here, big selling volume here. And then for the Japanese trade crisis here, when we rebounded hard, bigger selling volume, and then a bigger volume candle overall. So yeah, I mean, if we drop down to the weekly chart on the QQQ, we can see that the VWAP that we've had since August, we wicked right back up underneath that. That's very bullish. We'll have to see where this week goes, this coming week. If we, just engulf this back, if we just engulf this wick and climb down here, then, we're just going to go lower. And like I said, 459 area would probably be where we go. 440 to 459 for the measured move, 459 being the measured move. And then obviously you see your anchored VWAP here from October 2023. And then from there, like crash, 371, 400-ish on the Qs. So yeah, I mean, if you look here, we had increasing volume, selling volume during the Japanese trade crisis and the correction. Sorry. And then, just flushed, and then big flush, big buying volume took over, buyers took over down here, and then we launched higher, made a lower high, right? Lower high, but then it eclipsed that and then made a higher high and a higher low. So, it could be this all over again, this correction. Boop, boop, boop. 1, 2, 3, 4, and then go 1, 2, 3, 4, and then maybe one more flush down, and then a rebound in the same week. So this week could be that big flush down to 459, and then a rebound with a green candle. One more thing before we move on. This right here, we hit our -80, and you see we either hit -80 or we come down to the green barrier, and that is the point where we usually get a bounce, a big bounce at that. So just to make you aware, if this is a correction, then right here, right now, in this area, we get a bounce in the coming weeks, and we rally back to all-time highs. If this is a correction, if this is a crash, then we're going to sit down here, create a Williams consolidation box, and continue lower. Again, I put it 70% that this is a correction, and then 30% that this could be a crash. Those are my odds, and we're just going to play it as it goes. Last thing, you see we're consolidating right here. We had our double top. Our measured move is down to 459 for a 15% correction in the Qs. We're consolidating here. We could turn around here, Or like I said, we could have that one more flush, maybe down to 459-ish or something. And then the market says, okay, enough is enough. This is crazy. And everything's lining up, right? So we have this consolidating of the Williams or this consolidating of the stochastic, this consolidating of the RSI, this curling of the MACD here, right? Like we saw here. Terrible arrow. Like we saw here. Like we saw here. Back here. And this green line is like the lowest it's been. Like 2014 on. Like this is the low. Like we're at the lowest MACD that we've been since 2014. That's crazy. And then this RSI, you know, it's not at the lowest, but it's, you know, at 30. And you look back, and every time we've been at 30 or around 30, you know, right beneath this 30 or lower level, you know, we get these bounces. We do. We get the bounces. Like, yes, we can go lower to the green line, but, you know, we're here, we're consolidating, and, you know, we bullish crossed here, you know, and if we bullish cross here on the MACD, we break out of this Williams consolidation box, we break out of these boxes, I'm going to be hard pressed not to think at least we're going back to 493, going back to the 200-day moving average on the daily. And then from there, who knows? What I want to see to be, if for me to flip back to bullish right now and say we're not in this trend anymore, we have to break the trend. How do we break the trend? We break the trend by doing something like this. So we consolidate here, we break up, we see some continuation, maybe we hit the 200-day moving average, we bounce, we retest this previous resistance here, then we continue higher, right, to let's say 505, then we retest essentially the 200-day moving average, and we bounce and we continue higher. This scenario right here, I'm bullish. Because this says we bottomed, we made a lower high, or sorry, we made a lower low, a lower high, and if you pull up a line chart, you'll see, right? So right now we have a higher high, right? Let me move this. Right now, right here, oh my gosh, right here we have a higher high. This was the previous high. Now we have a higher high. Now, if we can, you know, make a higher low like this and start doing this thing, right? Start making some M formations, or start, you know, continuing higher with with higher lows and higher highs, then I'll start believing more and more that, okay, it's over, right? So yeah, that's what I'm looking for to really flip my mindset into, you know, more bullish. You know, SPY is really the same here, guys. It's all the same stuff here. There's nothing. BABA, we called out this inverse head and shoulders. We exited this name early, sadly, at like, you know, I don't even know where we exited, but can't remember. We exited early, sadly, though, guys, because we thought earnings was about to happen, and, you know, it didn't. TradingView was wrong, and I needed to back check that, but it is what it is. If we look down at a daily, you know, still plenty of room to run. The measured move of that inverse head and shoulders is up to 171. This has been the strongest name in the market during this whole crash. This Chinese name, not even all Chinese names, this one specifically, forming this nice symmetrical triangle pattern. If we break up above, you know, 141, if we break up 142.50 ish, it'd be a great time to take this trade and look for profits at 150, the measured move at 162 ish, and then the measured move of the inverse head and shoulders up to 171. And on the weekly chart, we formed our Williams consolidation box. As long as we stay in that, we'll continue higher. Everything's looking good. Bullish cross, green high 5. Very strong name here. And Okta had a big run up here, probably don't break out here unless the market really starts ripping. If the market really starts ripping, we break out over 117.38, 117.29-ish. I'll enter 1/3 position of shares and options, and then we'll ride it. We'll trim up here if we hit and do our we'll trim if we hit into our first profit target. I'm looking for something like this. They run up, a pullback to retest the cup and handle breakout, and then continuation higher, higher lows, higher highs, continue up. Yeah, this setup we posted a while ago and we haven't missed it. You know, we sat out earnings and they did really well. That's great. I wasn't going to risk it. And now we're right back here and yeah, just looking for this breakout. So like I said, I think play it 1/3 and then take profits up here into the red barrier. Take profits up there, probably fully sell out. And then I'm going to look for, I'm going to look for this pullback down here to retest and then continue higher. If we don't get the retest, okay. But most of the time, we're going to get that breakout. We're going to get that retest, and then we'll get the bounce, right? So, yeah, it's important to get that retest and enter on that. Besides that, those are the two big names I'm looking at. Maybe Nokia here. I want to pull back, though, to about $5-ish before I enter this one. But this one also looks good. We should get the pullback soon with the red barrier. Yeah, that's the markets. Those are the trades we're in. Those are the trades we're looking at. That's the economic calendar for the week. That's it, guys. I'm gonna go enjoy the weekend with the family. You do the same. Love you all. Appreciate you all. And yeah, hang in there. We're gonna start dominating this market big time, especially if we get this turnaround and start climbing higher again. Yeah, it's gonna be good. It's gonna be good sailing again. Right now with all these positions we're in, just status quo. We're just gonna keep doing this stuff. We're just gonna keep figuring out this markets. We're gonna keep day trading, smaller time frames, obviously. Take our gains when we have them, and then we're gonna turn around and have these longer term trades again. Playing both sides, some long, some short. And yeah, if we do start going higher, we're gonna have a lot of stocks. Yeah, we're gonna have a lot of stocks, primed and ready to go that we could get into, a lot, right? I can't even pull them all up right now, guys, but when we start going, we'll really look at this stuff and we'll really find those like Octas, like this is a perfect strong name that if this market really does start running, this is one of the only names that didn't flush after earnings. So if the market really starts running, this name's going to do very well. So yeah, we're good, guys. It's just been very volatile markets, up and down, not really knowing when Trump's going to tweet, and we learn lessons like we always do when things happen. We put it in the back of our heads, we put it in our pocket for later, and we always remember. So appreciate you all again. Hope you have a great weekend. Talk to you later. Monday live stream, day trading. Can't wait to see you guys there. Take it easy.